Welcome back, or happy first time meeting you. I am here today to explain to you how I make $400,000 a year options trading and really how this all boils down to making great stock picks. Okay. And I'm going to show you how I make those great stock picks. Okay. The truth is that if there's an options trader out there that is losing money, it's because they're trading the wrong stocks. So in this video, I'll break down the exact stock picking process that I use to make 105% return. Yeah, 105% return in 2024, all without trading highly volatile stocks or without spending all day looking at charts, so that you can also build a portfolio that's stable, cash flowing, and doesn't keep you up at night. By the way, there's also a link in the description to book a call with me if you want help options trading. So let's get started. All right. So today's agenda is number one, it's the hidden truth about stock picking. Number two, my 4-step stock picking formula. It's super easy too. You guys are going to love it. And number three, analyzing a stock live. Okay. So we're going to go through all of this. So the truth about stock picking is that stock picks really matter more than anything else when it comes to options trading. The problem is that most options traders obsess over the trade setup. They think that the trade is what is important. And that's true after you pick the stock. But if you make a bad stock pick, it doesn't really matter the fundamentals of that trade. They could still fall down and fall apart on you. And you really don't want that, right? You want to be right much more often than you're wrong. And so the way to do that is with picking quality stocks. Okay, so again, the mistake that everybody's making is they think that strike price, expiration date, and volatility is really going to be the crux of what determines whether their outcome is good or bad with their trades. But really none of that matters unless the stock pick is good. So options trading is really just leveraged investing. And would you leverage into a garbage stock? No. So then why trade options on that stock? The only answer I can ever come up with for this is that it's greed. It's greed, okay? So it's also like trying to polish mud. It's a pointless waste of time and effort, and most importantly, money, okay? Because money is a resource and we don't want to waste it. So the real risk is in the stocks that you pick, okay? There's another myth here with options trading, and that is that getting assigned is bad. It's not. What is bad is getting assigned a terrible stock. That's really bad, okay? My strategy is designed so that I'm happy to own every stock that I trade options in, and this creates a win-win situation in almost every situation. The only thing that I ever have going like against me is time. But time is also working for me if my stock picks are good, because most good stocks go up. That's the only reason they're good, is because they have consistently gone up, okay? So I need you guys to get that. Definitely get that. The only way a stock is good is if it's consistently going up. So if you notice, there's a stock that isn't doing that right now that's very popular, and that stock is Tesla. There's a lot of people that want to argue that stock is good. It's not. It's not. The numbers just are not there to support calling that stock good. So number one, what's the first thing that we have to do? We have to check that the stock charts are rising 3 months, 1 year, and 5 years in a row. Okay, so I usually work backwards on this. I look at the 5-year chart, the 1-year chart, and then the 3-month chart. And if those are all rising, when I'm reviewing stocks to see if they are something that I want to add to my long-term portfolio or I want to options trade with, those all have to be there. Now, I know we're in a pullback in the market right now. We're looking at these tariffs that are ridiculous, but that's a little off topic. So some of those 3-month charts may not be up, but you definitely want to have a 5-year and a 1-year chart that are up. In bear markets, we can make a little bit of an exception on that 3-month chart, but we have to go very lightly in with investing and adding new stocks to our portfolio during a bear market, because there is more significant risk there of the market continuing to fall. So the reason why we're not ever investing in stocks that are falling is because falling stocks often keep falling and rising stocks often keep rising. Let the trend be your friend. That is something that a lot of traders say, and to fight against the trend is really to paddle upstream, and you're sort of like hoping it works out. And the thing is like, hope is an intoxicating thing sometimes because maybe you think the company is cool and that's why you're investing in it. But I guarantee that is a terrible reason to invest in a company. I think that is the Tesla disease that some people have, is they think that, oh, this company is so cool. I really like what they're doing with energy and with robotics and all that kind of stuff. Yeah, it's cool. I'm not going to argue that they're not innovating. It's just that they haven't figured out a way to make consistently rising profits and figure out a way to make that stock go up. So therefore, until they do that, I'm not putting my money there because my money isn't safe there. And I'm only putting my money a place that it's safe, right? Like, you wouldn't put money on your countertop for anyone to take it, would you? No, you'd stash it away somewhere in your house if you were hiding money in your house. So where am I holding my money? I'm holding it someplace safe, and it's not safe in that stock. Okay, so our goal is always to maximize our upside while minimizing our downside, and we leverage historical data in these charts as a solid indicator of future results. Okay, so how you go ahead and check this is you just log on to Yahoo Finance. It's free. You enter your ticker symbol and you look at the 5-year, 1-year, and 3-month charts. It really takes 30 seconds to do this. If all three aren't trending upward, just move on to the next stock. Get a list. Brainstorm your stock list of like what companies you may be interested in and just go through it just like this. Check them off on a box. Like, does it hit 5-year, 1 year, and 3 months? If it doesn't hit 5-year, if it doesn't hit 1 year, no. This is just a no. We're saying no. If it doesn't hit the 3-month and we're in a bear market, that may be okay, but we want to go in very lightly. Okay, this quick and easy step removes the urge to trade speculative stocks, which saves you hundreds of thousands of dollars over your lifetime in potential losses. It just does, okay? The next thing that we want to do as part of the stock picking strategy that I use is that we look at the revenues. Okay, we're gonna go to see if their revenue is up year over year for 4 years in a row. And we want to see if the profits are up 4 years in a row. So those two different line items will give us a really good indication of how that company is doing, okay? So if you want consistent results from your options trades and you want cap gains and you want premiums and you want dividends, okay, you must trade consistently performing stocks. The biggest mistake you can make is putting your hard-earned money into stocks that aren't profitable or don't have consistent revenue. It's a guaranteed way to make inconsistent returns, okay? The reason why is because institutions are watching this data come in, okay? And you can't sneak by these professional traders that are trading millions and millions of dollars as parts of like hedge funds and mutual funds, that the earnings and revenue are not good for a quarter or two or a whole year. Like that, if that happens, those big shareholders are going to dump their shares. And when big shareholders dump their shares, stock prices go down. Okay. So while you may not be paying attention to this, that is only because of your lack of education. What I am trying to do is give you an education that it completely matters and that you have access to the same amount of information that all of the institutions do, and you should use it in the way the institutions do to your benefit, like the institutions do, okay? So how you can check on this is, again, you're just in Yahoo Finance. On the left-hand side, there's a bar that says financials, and then you click on that, and then you look at revenue on the top line, year over year. You make sure that number is going up year after year after year for 4 years in a row. And then you look at gross profit and you make sure that number is going up year after year after year. Okay, if there's 1 year in decline because there was a black swan event like 2020, you can skip over that year. That's fair enough, okay? Because I think a lot of companies struggled during that time. But generally speaking, we're out of the woods with that time period, and there's no more excuses. Now, when we talk about, people might say to that, well, I mean, now we're having these tariffs, so I can make an excuse for that. No. Do not make an excuse for tariffs. Tariffs are potentially the new world we're in. They could be somewhat permanent for a certain period of time. So you do not want to subject yourself to investing in companies that could be hurt by tariffs or are being hurt by tariffs, because that could be sort of like a new norm we're dealing with, and we don't know what's going to happen with that yet. Okay. So the third thing that I'm going to look for is for that thing I just touched on, which is institutions buying the stock. Okay. So why this matters is that if a stock has high institutional ownership, It means the smart money people, the people that have millions and millions of shares, really see long-term growth there. They see the past growth, and then they think that that company still has the potential to grow in the future. Okay. It's a better idea to bet with them than against them, because again, you can't debate you can't debate this. If they have more money than you, they can determine stock prices. Okay. They just can. That's why I trade only stocks that have 70% or more institutional ownership, and high institutional ownerships creates stability in that stock price and makes consistent returns. Okay. And that's really important to me because I am trading for income. And so I need my income to be somewhat consistent, don't I? So that I know I can pay my bills. So how you look at the institutional buying pattern is that you just go over to Yahoo Finance, you go to holders, and you click on the percent of institutional ownership. If it's below 70%, you got to really proceed with a lot of caution there. And I would say it's out. Don't do it. Because it's going to be a retail stock, and retail investors just don't react to news and data with the same amount of stability that institutions do. When there are pullbacks on the market or when there are surges on the market, the retail trader gets FOMO and like rushes out too fast or too late, or jumps in at high points. And so they're just more difficult to trade. And I don't like that. Okay. So, and then the fourth thing is going to be the market leader. These stocks have to be the market leader. I really prefer a monopoly to invest in. Hope you guys can hear my dog shaking it out behind me with her collar. Sorry about that. But why this is crucial is because the best performing companies tend to be monopolies. So I mean, are they the best for the consumer? I don't know. I'm not in that debate. I'm not here to be political about monopolies or anything. I am here as an investor and an options trader. And what I am looking for is profit, and I am looking for premium. And I am looking for my premium to be somewhat consistent. Okay. So the thing that's so important about a market leader or a monopoly is that they can overpower the competition with setting prices. Small companies have bigger barriers to entry to compete with them, and market leaders have customer loyalty. And so we just want to take advantage of that. We kind of want more. This is literally what I think of when I buy a stock, and maybe you'll want to take on this idea too, is I buy a ton of stuff from Amazon. Like, who doesn't, right? But what I love owning Amazon shares, because when I spend money at Amazon, I'm like, well, at least I'm spending money on something that gives me money back. So I love that idea of, getting money back from the companies that I'm spending with, because I feel like I'm getting some of what I spend back. Maybe it's not true, but I'm pretty sure it is. Okay. So this is all very important, and you need to pay attention to whether these companies are market leaders. I would even say industry dominators. Okay. So it's got to be a market leader. Now, when we say market leader too, like if you are talking about in sports apparel, and you're like, Nike's the market leader or something like that. So that's a reason, but they're not like a monopoly. So I would again be looking more for monopolies here, and making sure that they're an industry dominator, like they are the dominant force within that industry. Okay. So it's pretty obvious. How do you check for market leaders? Well, you're going to brainstorm some stocks that you want to invest in, right? And you're going to have to just be pulling names out of the air. But what I would do is start to think about, like, who are the companies that absolutely can't live without? And that if they went away tomorrow, I would be sort of devastated because I rely on them so much. And this might not be completely obvious, but like Amazon, I mean, it's hard to get by without Amazon these days. But like Apple, I do all of my tech work, all of my computer work on Apple. I have an iPhone. All my kids have iPhones. It's just like, if I try to pull Apple out of my life right now, it would be a huge adjustment and not one I would want to go through. So that makes me want to invest in Apple. I'm also an investor in Costco because, I think I got like a $700 bill from Costco every month. So it's just one of those things that I start to look at, who are these companies that would really be sad if they went away? And then I do research on these companies to find out if they are good or not. You can also go back to some of my other videos, and you can see where I did all of this research already and made a stock watch list. And you can check it out and get some ideas there on what you might want to have a look at. Okay, so how do you analyze these stocks live? I'm going to do it with you in just a moment. So we're going to flip over to do that, and I'll see you there in a second. We have this beautiful live feed of Costco right now. That's the stock I'm picking. This stock is outrageously expensive, is it not? But the best stocks are expensive. I'm sorry. I don't make the rules. I imagine this stock will split sometime in the future, probably within the next year. But anyway, here we are, and we've got a 5-year chart that is up 231%. Very impressive. A 1-year chart is up 38%. I mean, who wouldn't be thrilled with a 38% return in a year? I'm a shareholder. I know I am. And then we have the 6-month chart, which is up 14. I do my 3-month chart research, just so you guys know, on Robinhood. But you can look at 3-month and 1 month on Yahoo Finance and see for yourself what's going on here. But both of these are up, and that's very impressive for right now because we're having this tariff conversation. Okay, so that is a winner. The other nice thing that you're going to see here is that Costco pays a dividend, and they also increase their dividend a lot, which is great. And a lot of times after Christmas, they'll give out like a special dividend of like $10 a share or something juicy like that. So that's another reason I love this stock. I'm getting a little off topic, but let's go over to our next thing. So this passes the charts. We're like, woohoo, passing in the charts. Okay, now let's go to financials so we get to move on. If Costco wouldn't have passed the charts, I wouldn't be looking any further. I'd be like, done, moving on. Okay. I'm brutal. Okay, now we're going to look at total revenue. And we're going to see from 2021, and we're just going to go highlight it across this box. And we're going to go 195, 226, 242, 254. Wow, that looks good. And then we have the gross profit, 25, 27, 29, 32. Okay, this is impressive as heck. Okay, I can just tell you, because I do a ton of this research all of the time, there are not many stocks on the market that have this. Okay, these two things, just going for them right now, it's rare. It's probably like 40 to 50 stocks that have this on the market. Okay, maybe not even 30. Like, it's rare, just to let you know. So again, you can go see some of my videos on which stocks those are. I'm happy to share about that. I can't do it on this video because I promised it would be short. And then we're gonna go to holders. Okay. And we can see that 72% is owned by institution, and the float is also held a lot by institutions. I mean, we're getting into the nitty gritty there, but that's also impressive. So that's really good. One of the reasons also that you're going to see Costco being owned by a lot of institutions and not retail folks is it's so expensive. So that's another thing. Okay. And expensive means good. Now we just get to pick our brains about, like, is Costco an industry leader and dominator? Yeah, it is. It totally is. So as far as like those stores that sell things in bulk, I mean, it's Costco and it's Sam's. And when you talk to people about which one's better, they'll say Costco. So that's just the way that goes. Okay, we're going to go back over and wrap up the rest of this video. But this is all winner, winner, chicken dinner right here. So did you guys notice how long that stock review took? It took less than 2 minutes. And that was because I was yapping at you the whole time. So if you had just done it on your own, now that you know how to do it, it's only going to take you about a minute per stock. How amazing is that? You don't have to do a whole lot more research than that. There's a lot of people who do research on earnings per share, blah, 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 blah. And I'm just like, that's ridiculous. Why spend your time doing that? You can take that advice or leave it. It's not even advice. It's just my opinion. But the system is so easy. It rarely has me showing losses. That's how I made that 104% return last year, February to February. And I know that I can continue to use the system because I have for years. So if you want help trading options, please go ahead and book a call in the description. I can't make stock picks for you. That is not what I do. But what I can tell you is what trading options would be like for your stock picks. Okay. So if you came to me and said, hey, I have like 8 stocks that I sort of like have in my portfolio, what would it be like to options trade these? I can give you a really good idea of what kind of premiums you could make and how you could trade options to take advantage of stocks that you already love And if you use this system to make great new stock picks, I could show you how to options trade those stocks. Okay. I did a very similar thing for my client AJ, who made 100K, really 100K in 96 days with his options trading portfolio. He really didn't know a whole lot before he met me. He knew some, but he didn't know everything. And I would say really he's an expert now. And AJ's results are not that odd in my group. It is a group of traders that are very happy, and they're all pulling money from the market, from their portfolios, and I know we can do the same for you.